All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back and happy Wednesday to you. And I'm really excited today because I'm bringing on Nick Trades, who many of you know her as Nick Trades, but Nicola Duke, I'm bringing her on the Morning Edge so we can talk a little bit about the Brexit and possible, pros and cons and fallout in the currency market and in the equity markets in general regarding a stay vote or regarding an exit vote. So without further ado, let me find Nicola and bring her on. I'm going to unmic her right now. Let's see. There she is. Nick, are you there? Good morning, Nick. Is it today Tuesday? Today is Tuesday. Nick, are you there? I cannot hear you. Can anybody else hear her? Nick, I just unmiked. Oh, there you are. Now I can hear you. Nick?
Yeah, I'm just trying to get my headphone to work. Is that right? Can you hear me?
I can hear you. How are you doing this morning?
Very
and
good.
I can't believe I just said it's Wednesday. It's Tuesday. Happy Tuesday.
Oh, I'm so upside down. I cannot wait for this week to be over. I can't wait. Neither can you.
I can't.
Yeah. Going to Hawaii, but
I know. I can't wait either. But as far, I mean, I'm sure you are extremely excited to get this kind of past you, if you will. But before we talk, I just want to say thank you so much for taking the time to meet with us, and I know this is valuable time to you as you trade the markets pretty aggressively, and you do it for a living.
Well, I have to say that, no, I haven't been because of, I haven't liked the markets, and I don't like this referendum, and I kind of don't like the binary risk here at all. So I have been taking it easy, but can't wait to get back in.
Can't wait to get back in the swing of things.
Yeah, I can't wait to get it over and get it, get it on. I think it's a massive risk either way. It could be a huge tape bomb.
So before we talk about kind of the maybe the upside, the downside and the possibilities and maybe market responses, for those people that don't know who you are, can you tell the traders out there who you are and kind of and why I would even bring you on, and I'm gonna actually pull you up here on Twitter so people know who you are.
So I'm a trader and a technical analyst. I'm a professional trader. I trade for a living. I have for myself for a living. I have done since 2008, and I've traded stocks as an investor since I was 15. So.
My gosh.
And you and I are together because you and I have been working together on a technical analysis site for the last, it feels like a year, but I think it's only 10 months.
Yes.
And we're going to be launching at the beginning of July. Hooray!
Yes. I'm so excited.
And we're really, with us and a lovely guy called Stelios and Steve, and an amazing Elliott Wave technician. Steve is an amazing Elliott Wave technician as well. Stelios is a professional fixed income trader and professional trader, and Gregor Horvat, who's a great Elliott Wave technician.
Yeah, I'm excited. We got a great group, and Forex Analytics, for those of you that don't know, is something that Nick and I have been working on. Now, Nick, you and I go back. We go back.
2008, probably, or 2010, a long time anyway. Yeah, at least 6 years.
It's been a long time, and it's been a wonderful journey. Being able to just work with you actually over the last almost what it seems like about a year, but even over the last 4 or 5 years, 6 years, we've known each other and we followed each other on Twitter. We've had a really great working relationship, and I've learned a lot from you over the years, and I've been always very appreciative of your A, your knowledge, and B, your market savvy too. So
I'm a good bluffer.
No, hey, as most traders are, and that's what makes you great, but you in particular, obviously you live in the UK,
I
and
did, although when I first started trading, I was living in Toronto, and I was getting up at, like you, I'd get up at 2:30 in the morning to trade the London Open, which was nuts. I'm much happier in this time zone
I'm
with
I'm
more
sure
sleep.
I'm sure you are, and you were you used to be an air traffic controller, and you
Yeah,
got
and I was always in
and tell us a little
aviation.
bit about that.
So
Yeah.
yeah, I was in the military, and then I was at Heathrow for a few years, and then I took some time off to help somebody start an charter company, and then got into it big time. Ended up running an air charter business, large aircraft jets that do like band tours or Saudi princes, and had a bit of an adventure. But I always wanted to trade, so it just really gave me the time and the money. So
Wow, that's and so as an air traffic controller, I'm sure you have to be obviously on your toes and you have to be able to make decisions quickly. I can see why and how that skill set is transferred over into the markets over the years.
maybe, but it's a bit of a Pavlov's dog thing. If you yeah, you have to make decisions quickly. But I think you like see patterns and think in 3D. Um, but yeah, it's really just like conditioned responses. So I think it like helps with systematic trading. Whereas, when you see this, you do that, and when you see that, you do this. So it helps in that aspect. A lot of it was quite uncomfortable. You were always a lot of the times, particularly at Heathrow, I was always felt like I was working on the edge of my coping ability. So like you didn't, it's like working on a conveyor belt, and it's going at the fastest speed that you can cope with. And if it goes a little bit faster, you're not going to cope anymore. So I always felt like I was there. I was quite uncomfortable, and so that helped with the trading because I don't always feel very comfortable trading. I don't like being offside. Like a lot of people, I don't like being offside, and it's frustrating. And so
Yeah.
um, it helps with that because yeah, it doesn't always feel good trading, does
Oh
it?
no, it doesn't. It doesn't.
And you're kind of going, oh, should I keep it? Should I dump it? This is it's pants. What shall I do? And really, you don't want to be doing that. You want to be just. It needs to be just systematic. If it's not
Right.
wrong until it goes here, and until then, you just stay with it.
There you go. And trading is so much the same. Well, now living in the UK, obviously you're very sensitive to and to the what's happening this week. And I don't want to
The referendum,
the
the
referendum, and I
Brexit
didn't never
referendum.
it is, and I don't want to be political. And I never, even in my own webinars when I conduct them every day, I don't. People know that I'm a Republican, but I don't go much further than that. I try to keep politics away from.
You're a Republican? I would never have come on if I'd have known.
See, exactly.
No,
And
I'm joking.
but
There's been
it's
a lot. There's been a lot of name calling in this referendum from both sides. It
I'm
really hasn't
sure.
got very nice at all. And I think it's very sad because I think that there are people on both sides of this argument who believe what they believe for very principled reasons. They're not racists, and they're not stupid, and they're not just voting to remain because they get paid by the EU or it makes them money. And so it's unfortunate, but that's politics. I think it's quite dirty. It's not a secret that I'm on the Leave side, but
But that doesn't make you
yeah,
right. It doesn't make you right, and it doesn't necessarily make you wrong
I really
either.
don't think there is any right or wrong in this, and that's probably why it's got to name calling. So
Yeah, and I could see that. So
I
with
think that I have
go
to
ahead.
say, like, I know the polls are neck and neck, and the bookies say that Remain will win. I think, referendums tend not to, people tend to swing towards the status quo when they vote. So I think the polls are probably right. It's unlikely we'll vote to leave, although I kind of hope we will. Or no, I completely hope we will. But um,
But even if okay, now again, pushing your views aside, even if there is a leave vote, that doesn't necessarily mean that you guys are leaving the EU. And isn't there
yeah,
and
we
explain
have
from a
actually. You know,
Okay, go
there's
ahead.
our chancellor would like everyone to believe that people will get dismissal notices the next day and all these businesses will literally close down the next day. We actually get 2 years to negotiate our exit. And if we haven't negotiated that in that time, we could extend it. You know, we could take 10 years to untangle this. So nothing is going to happen straight away. And so I think it's really just, you know, ridiculous and over dramatic. I think that there could be some political trouble because the majority of the government, 75% of our politicians are Remain. So if there was a leave, then I think there probably would have to be a general election as well,
Okay,
because it would be quite hard to see them implementing the will of the people as they want it.
okay, so so we talk about if that was the will of the people and they want to leave. I mean, you're talking many years to untangle, and I think untangle is a really good term that you could use to describe what has become probably an extremely tangled web, politically, trade-wise, integration-wise. I mean, it's not going to be an easy process, even if the voters vote to leave.
No, not at all. Exactly. And there will have to be protections. You know, there are an awful lot of British people who live in Spain and France and all over Europe. And there are a lot of people from the rest of Europe that live in the UK. And so, you know, everyone, like, they won't have to pack their bags and leave the next day. Everybody, you know, it will all, they'll all be taken care of. You know, I don't see that we'll just, you know, say F you and walk out and everybody get on the bus now. So yeah,
Okay,
it's a long
well,
process.
it would be a long process, but let's talk about the flip side of this. I mean, let's talk about if we stay. I mean, which in my opinion, and it's always been my opinion, and I think you and I have talked about this, that, you know, when push comes to shove, it's, you know, you're I think you're right that a lot of the voters are going to, you know, they're going to get to the polling station, they're going to say, well, you know, status quo. Let's just assume that, you know, the UK votes to stay. What really changes? I mean, what, you know, again, this is an American asking, you know, a UK citizen, what really changes? Does anything change? I mean,
Really nothing immediately, except that any laws that we pass in the UK cannot be overturned by the European Court anymore. So we get the final say back, whereas now pretty much all of our laws could be overturned in the European Court if they don't comply or they don't like them. So,
but if you decide to stay, that still happens then.
right. So
Is it,
our parliament could afterwards decide to immediately stop the free movement of labour. So that and implement immigration controls. I don't think either side, Leave or Remain, want to stop immigration, but the Leave side definitely want and both sides, I think, want some immigration controls. So Remain will tell you that not having any is the cost of being in Europe, and so it's worth it. So I think that might change right away, but that doesn't mean people can't come anymore because we need immigrants. So.
Okay, now everybody, I keep hearing this point system. Like the Leave camp wants like a point system for immigration, similar to what they have in Australia. So if, like, I have an IQ of 30, which is probably pretty close, I'm going to score a little bit lower on my point. I'm not going to be able to come into the UK. Is that how it works?
No, well, and they have one in Canada too. And you know what? It's in America. Well, apart from you, I realize in America you have a lottery. So, do you still have a green card lottery? I don't
I
know.
don't, I don't know. I don't know.
I think they
I'm
do, yeah.
American. What? I only watch MTV. I mean, I don't even know. I have no idea about the immigration process. Actually, it's so sad that I don't.
In
And
in in Australia and in Canada, they have additional waiting for jobs we need. Okay, so if
yeah.
you're a nurse and we need nurses, it probably won't matter what languages you speak or anything else. You can just come. And if we need bricklayers or whatever, so in a way that's really good for our economy because we can get, you know, what we need. And not only that, but it's really good for people around the world. So if you're, you know, in Bangladesh and you've all your life wanted to work in the UK, you can look at what jobs, so you can do this in Canada and other countries at the moment as well. You can look at what skills those country needs, and if you've always wanted to live in England, you can, if you qualify to be whatever it is we need, then that's a really great way for you to come. So,
Okay,
and have a new life in this country if that's what you want. So, you know, in a way, it's a really good incentive as well.
got it. So now when you're talking about the market reaction, yeah, I mean to
Okay,
me,
because
let's
are we going to talk about the market? Because I've been looking at charts for you all morning.
yeah, no, we are going to talk about the market, and then this is
Okay.
why I wanted to segue over to, because I know you've been preparing, and I know
Well,
you've been
yeah, and I kind of wanted to stay off the politics because I've had quite a lot of flack
yeah, and I
over
don't and
stuff
I and
like
I
that.
and,
So
and I don't want to go there, but let's talk about the reaction, because and I felt we were getting a little deep in the woods. I'm like, you know what? Let's change course here. Um, the the thing about the just the market reaction since last Thursday, I'm gonna flip over to your charts, but I just, for anybody who's not really paying attention, I've got a lot of equity market traders that maybe don't, they're listening in and they don't really focus on the FX market so much. We've gone from
okay,
basically 140 to 148 in the pound, just in since last Thursday. So I mean that's a huge rally in the currency, and my initial reaction, my gut instinct is, oh my God, the market's totally trying to price in at this point a remain. Because maybe they got swayed based on some polls and the unfortunate passing and murder, I guess you can call it, of Joe Cox, there in the UK, that has really swung sentiment, and we've seen this massive move in the cable. So I want to be able to flip it over to your charts, but I want to also
uh, yeah.
I also wanted to ask you, do you think that sentiment has swung to such a point that that perhaps at this stage in the game, that if the UK decides to stay, it's going to look more like a non-event than anything?
Oh, if the UK decides to stay, it could
Yeah.
well be a non-event. Yeah, and I'm not really. Either way I look at it, when I look at the pound, say when I look at cable, like it's not, to me, impulsive. I think it looks more bear flaggy and yeah, I'm not 100% convinced. I think this really sharp rally was positioning. I think people saw the swing in the last 2 weeks towards the Leave campaign, and everybody went, "Oh heck, this is going to go without me," and got short. It looked like, from March, it looked like from March until sort of the start of the month, it looked like a rising wedge, didn't it? And an ABC from those March lows. So I think people got short because the Leave were gaining momentum and they were pretty clearly in the lead with everybody. And then this happened, and they're like, there are massive bets on this referendum.
Okay, so here,
And
let
so
me
I
let me
think this to me is just a big squeeze. The
I'm
last,
gonna
and you can time it from when that unfortunate murder happened.
I'm gonna flip it over to you as a presenter. So it's you're gonna see the webinar um, prompt. There we go. I can see. Okay, I can see your cable chart right now.
Okay,
So okay, so
that's
that
great.
this is a really good point that you're making. I think a lot of it, as you were saying, a lot of it was positioning. So
Yeah.
let's talk about like bear flaggy. How you said it was fairly impulsive. Explain to us what you're seeing here.
Okay, so I'm gonna go. Here's my monthly chart. I'm gonna start here, like my big big picture view. Like
Sure.
obviously this sort of 138 level was really big support that we bounced off. But in fib terms, we weren't. For me, like we weren't quite there. We've got potential to go lower. When I switch to a daily chart, which I'm going to do here, and we look at the move from. I'm going to zoom in. So this here clearly. Um, is an ABC. Like it's not five waves up. It's an ABC, and we rolled lower, and then we've done another one. We're retesting this high, but it's sideways. It's corrective. So until that behavior changes, it's not bullish to me yet. So I wouldn't want to say, oh, based on my charts. Sometimes I look at ahead of big news events, I'll look at what the charts are doing, and sometimes you can get a clue of how the news is going to be. There's no clue for the referendum here. It's just sideways. You don't know which way it'll go. But for sure, I think a leave vote will send us back to 138. But there's really good support at 138.
Mm. Okay, so like if it's a remain vote, which it seems, at this point, and it's only Tuesday and the vote's on Thursday, we still got a couple of days of jostling here.
Right.
But let's say
Yeah,
they
it could
want
be.
to stay.
So from the March low, right? This is the daily chart again. So we've done this A, B, C, and then we've done one lower. We could what very often happens with them. Sorry, I'm gone mad here. What very often happens is then it makes another one a bigger one. So what that would mean from here is we would get. It's not working. Hold on. We would see. So on the upside, we would see this first rally from the March low repeated. I'm just going to line it up, which that takes us to 149.50, which we're nearly there. So to me, if we get to 149.50 and we've made a big ABC before Thursday, yeah, I think we might already be all done, and we could easily sell off from there. So
Okay, so and that to me seems very logical that
150, yeah.
we get
That
we
they
get to
squeeze.
stay.
I could see that we could squeeze everybody to 149, 150. Cable is one of those really likes big round numbers, and 150 is a big round number. So I could definitely
Yeah.
see that.
Okay. Now if so again, we're talking about like a possible non-event here. I mean, the cables rallied 800 pips basically, 800 pips just in the last couple of days. It's like how much upside is it, even if
I
we
don't.
vote to
I
stay?
really. You're right. I don't think there is. I think a lot of professionals traded this in volatility. They're not going to make any money because that's the way it's behaved. Um, if you're going to buy it on a Remain vote, are you really going to buy it when it's rallied that hard? It's not that different to any other currency versus the dollar. And when you look at it versus the euro and the others, it's not that out of line. I think a lot of people are trading it by short sterling yen. Short sterling yen is a trade I like because I like the yen, but more because I like the yen long than I like anything else. So,
Yeah, I know,
and
and
I
the
like the
yen has
yen
been
long because I like the bonds. I can show you the patterns of the bonds next if you like. So, want to
yes,
look at
please do.
stocks and oil? Okay, so that's the pound. Yeah, I do. I think if it's a Remain vote, I don't think there's an epic trade in the pound. But okay, so we'll go.
And while you're looking at you're pulling up the buns here. So if it's a
I'll do the
leave
book and
vote,
then I'll do ZN. So yeah.
but if we get the results come in late, well, for you guys it'd be really late Thursday night, Friday morning. For us it'd be late Thursday night here in the United States. I mean, how quickly? I mean, you're not unless you're
Oh
positioned short sterling. I mean,
no, it's
the risk could be.
completely binary risk, and it's going to be a one-way move. Now, the FT had a story today about, there's not going to be any official exit polls because exit polls, what they do is they take small samples and then they make predictions based on how people voted before because we have elections all the time. Well, we've never had a referendum before, so they can't really do exit polls because but the FT reported today that hedge funds and banks are doing hourly exit polls, and they're betting huge money going on this. Like I really do think yesterday's rally, was based on a move in the betting that because you can see what the bookies odds are, and they are moving constantly. And so that was moved yesterday by moves at the bookies. Well, the biggest bet that they took was £25,000. So for a £25,000 bet, you can move the odds, which moves cable, which moves all the other markets, and makes you millions. So I think there's a lot of manipulation going on, and I'm not even sure now if I really trust the bookies' odds, because a lot of it reflects betting and positioning, not just what they think will happen.
That's so interesting that you say that, and that's a really who reported that number? Because I remember reading it yesterday. Is it the FT?
It was, yeah, no, it was the £25,000. No, it
Yeah.
was in all the media, but I mean, I read it on Zero Hedge. I'm a fan of Zero Hedge. I don't mind saying.
Ah,
A lot
that's
of it, a lot, a lot of it's amusing, and some of it's good, and you do. But yeah,
yeah. You have to
you
say
don't need a
you definitely have to
subscription.
put a filter on.
Yeah, you don't need a subscription. You can read it on Zero Hedge.
Okay, all right. So let's talk about look, you were mentioning
Okay,
the
so yeah, I'm just going to show you. So there are some in the bonds. So the reason I like the yen is because I like the bonds. Um, Anybody who's so here's the daily is a Gartley pattern. So you have a sharp decline, a rally to the 618, a pullback, and then a rally to the 786 where the 1272 lines up. So I'm going to draw it as a pattern so you can see it.
oh God, look at that.
It's there. So yeah,
It is there. It's really the
so that's the one, and now it's just double topped. It's a messy double top, but it's a double top. So I think that so this was the first leg. I think that this will then be a second leg lower in the bins, which will take it back to the 200-day moving average and a slightly lower low. So yeah, down to 159 probably, or this
okay. So
previous.
tell me what the ramifications of a move like that. So if the buns move, let's
Okay,
say it
so
makes a
why is
lower
this
low.
happening? Like the last time the bins made a high was when the yields went negative. China went berserk, and and what has just happened in the bins? Like all the yields have just gone negative again, and so that I think is why this is happening. So that's why it pays you to keep an eye on the yield chart. And so if I go to ZN here, I'm sorry, these are my working charts. They're a bit messy. I really hope all you at home can see. So here's the 786 of this decline here, and it's
Right.
also the 127 of that decline. So that lines up, and an ABCD from the September low. So it's not quite the same pattern, but it is a bearish pattern, and that bearish shooting star yesterday. So I'll just draw it in again. So there's your Gartley
Right.
in the
Okay.
1272 So there's your Gartley in the ZN. So um, Japanese yen trends to trade is correlated with uh, bond yields. So that is why if you're bearish bonds, you're bullish bond yields and you're bullish yen. So dollar yen trades is correlated with the bond price, and the yen futures is correlated with the bond yield for people listening.
So if bonds go down, you would expect a continued move up in the yen pairs.
Yes.
Okay. All right. So maybe like one of the best trades out there would be long pound yen if the UK decides to stay.
Oh no, the other way around, Blake. So I'm bullish yen,
Oh, okay.
so I'm bearish pound yen.
Oh, okay. All right. Very good. Very good. So, now the pound yen, do you have that chart available for us?
I
Did you
think
do any work on that?
um I do. Uh, she said famous last words. Just
There it is.
I'm trying to do it on our forex analytic charts, and I'm scooting my way around. So I'm
No,
like,
it's all good.
I had it here, and now I can't find it. How did this happen?
That's okay. I don't
Disgrace,
want to.
disgrace. Here we go.
No way. No way. No way.
Okay, yeah. So this is quite an interesting chart. When I use Fibonacci, for me, I always put from the highest high of a swing. So when you're looking at a swing, I always put it on and I look at the 23.6, which in the pound yen is 157.33. So that's like trend resistance. This is a daily chart. So if the pound yen bottoms, it's got to trade above 157.32 and a daily close above it. So that's my trend resistance. But when I look at this, I'm just going to go down to a 4.
By the way, the pound
So
just came under some pressure here.
yeah, so on a rally in the pound, on a remain vote, that's where I would be looking initially, and that's a really good level if it rallies into that. I would like to sell at 157.30. Um, the reason the pound I think is under pressure is while we were talking a Survation poll, an IG Survation poll came out, and if somebody looks for that on Twitter, they can pull up the result. It sounds like it had a bit of a swing to leave. So
Oh, okay.
yeah, so I am bearish this. I'm looking for it's I'm looking for sell entries. We're just shy of that. Like it lines up with the 61%. I do like it a little bit higher on this 4 hour, but yeah. So that's my. I haven't really got a pattern set up in the pound yen. That's just that's my favorite trade if it all goes pitong and we get a leave vote. Just
Okay, and
because, like you, I'm bearish dollar yen.
right, okay, very good. And the pound yen, obviously, it's going to be one of those. I mean, I can only imagine the lack of liquidity in the event that there's if the UK votes to leave, the immediate aftermath of that type of move, it's going to be probably very, very fast. And like you said, there's the binary risk there. I mean,
Yeah, exactly. Yeah. So I'm sort of bearish oil here. I think we've had one leg lower from from the high on the 9th of June, and I think that we'll see a second leg lower from here that'll put us down into the lower half of the 40s, so 45, 44, maybe 43. So I'm bearish oil, but if you want confirmation, this kind of a rising wedge. This is August. This is
contract.
Q contract,
Yeah.
yeah, but I have got the continuous here as well. I think I got it ready. So I'm bearish oil, and I'm a little bit bearish stock indexes, but only
Oh,
short term.
yeah. I was going to say, if you are, how about have you taken a good look at the FTSE? Because I haven't, and then I'm asking you, if you have, just because I haven't, not because it's not something that I'm seeing anything in particular.
Um, I'm having trouble getting this. Hold on. Um, the FTSE, has only managed to rally to 50% of the decline from last summer, and then has turned over again. It's made an ABC lower before it rallied. So this is my weekly chart. I need to go down to daily, and I've got your messy fibs on, Blake, instead of mine. Hold on. I'm
I
just going
thought
to
yours
put
were a little
more.
bit more messy. So for those of you that don't
Yeah,
know,
mine are. Yeah, I like
I,
it. Put more.
well, Nick's doing a little bit of work. The one thing about Forex Analytics, which is the project that Nick and myself and the other folks are working on, is that we have very similar charts. So this way, as we're doing analysis, we trust each other's analysis to a point where, as we're doing analysis,
We
you're not.
draw on each other's charts.
Yeah, you're not going to know if it's mine or if it's Nick's or if it's Stelios or Steve or
Okay,
Greg
so
is a little bit different as he does EW. But go ahead,
yeah,
go
yeah,
ahead.
we're not allowed to write on Gregor's charts. Okay, so
Right.
weekly view. The bullish argument. Here's my bullish argument. Okay, we've retraced 38.2% of the rally, and then we've rallied. And we've only pulled back. We've pulled back half of it, and then we've got a weekly hammer last week and rallied again. Okay, so this looks a little bit bull flaggy. That's to me like if I wanted to make a bullish argument, that's my bullish argument, and we've got another leg higher, or this triangle, because it is, or it's a diamond pattern really. I don't know if I can make my mouse work to draw it. I'll try and draw it. Okay, I can't do it. Do you know,
That's okay.
I've
If you have to take the the silly magnet off on the
anyway,
left.
yeah. Oh, that's why I'm having so much trouble. Okay,
Yeah.
so this you could see is either a diamond, or if we edge a little bit higher, we've got a head and shoulders, inverted head and shoulders bottom in the FTSE here, with a neckline around sort of 64.30. Okay, so, and we've reversed at the 38.2, which often means, you know, trend continuation. So that's my bullish argument for the FTSE, potentially. If I switch to a daily, go down one, and so we'll just look at this the bearish argument for Fibonacci traders would be that from this high, so from this high of from last summer's high, we've rallied to 50% back at 64.30 and rolled over again. So that 64.30 level, you know, becomes really key in what we're going to do, I think, going forward. So
Yeah.
quite interesting, you know, there's a level just below that, which is the year open price in the FTSE, and it's 6,300, and that was the high 2 weeks ago. So, and we've knocked around on that level quite a lot. So I would say that that's above that is where we get green on the year again, and people will be looking at it. So if it is an inverse head and shoulders, you can see from this price action from that last September low, we've got some more sideways trading before we go higher.
You know, one of the things that we haven't talked about, Nick, is we haven't talked about the euro response to a Brexit or a Remain, because you know
Yeah.
everybody talks about how important the pound is and the move in the cable, but what about the euro? I mean, because let's talk about for a moment. Let's talk about the exit risk, because if the UK decides they want to leave the EU, it does pose a risk
Much.
to other European members, right?
Yeah, I think that the market will start to price in the fact that the Eurozone might itself break up. You know, my personal view is the European currency is a disaster without political union, you know, and what they've done to Greece is just shocking. But that doesn't mean that, you know, they won't carry on and try and fix it and muddle along the way they always do. Um, so, so that to me, um, I think the market, if there is a British exit, they'll start pricing that in, and so that, yeah, there could be some downward pressure on the euro. Not only that, but the market will expect the central banks to take action, to do something, you know, to stabilize the market, pump liquidity, which is negative for the euro. And I think the Swiss will be the trade rather than the euro, because, you know, the Swiss National Bank work really hard to get ahead of the euro so it doesn't get out of line. So if you miss
Yeah,
the euro, you can always trade the Swissy, sell the
there
Swissy
you
instead. But yeah, so I'm just going to delete the fibs. So there's a bit of a rising channel. I think a break of this channel could send us all the way back to the lows, at least 107. But that's
yeah.
what I'm watching.
And you know what? It's interesting. You and I are looking at the exact same charts. I just yesterday on our lunch webinar, because I wasn't on the morning webinar, I had mentioned that, hey, as long as we're above 111, you know, it's what you get below 111 in the euro, that really changes the technical outlook of the entire euro.
Yeah, it's that
Because
previous swing low. It's the 200-day moving average, which the euro dollar does respect. And yeah, like it's then we're looking at a lower low. Then we're looking at another leg lower. So then we're repeating the leg that we made, you know, from the May high to low. We're going to repeat that, which does put us to 109 at least. So
and see, so you got a lot of people that really think that, and again, I'm gonna back up to like this week. The the fact is the UK, at least in people's mind, they're not going to leave. They're not going to vote to leave. So I'm safe being long the euro right now. I mean, so one of the big risks, obviously, is in the event that there's a vote to leave, and the UK does vote to leave the EU, the euro could be hit in a devastating manner. A lot of people keep
Oh,
focusing on the
yeah.
pound,
And
but
remember, that's not just the euro. So even if you're just trading crude oil, like if the euro is the dollar, is the other half of the dollar, it's 50%, 57%, 56% of the dollar index. So if the euro collapses, the dollar index will rip, and that's downward pressure on just about every commodity. So the metals, people who think that they're, buying gold because it'll all be great and it's safe, I don't know that it will be that safe, and they're forgetting what happened. When it's risk off, and gold is risky too.
yeah, and, and,
So
and, and, and that's the big trade right now that everybody's talking about. Hey, I'm buying
yeah.
gold because if the UK votes to leave, gold's going to be the only place to hide. Do you necessarily believe that?
No, I don't, and I think if the dollar rips, it won't be that much fun. I think that we'll get some bit of a bid, but I don't think it's.
It may not be like the like
No.
gold's going to see 800. Gold might drop down to 1200 from 1270 where we're at right now. But a lot of people think that that's the slam dunk trade. UK leaves, I'm going to
Whenever
turn around and buy
everyone
gold.
thinks, yeah, but whenever everyone thinks that's a slam dunk trade, it makes me really nervous.
Of course, I know.
And it does look a bit double toppy, doesn't it? Gold.
It does. The false breakout was
Yeah.
they're
For
above
those
30.
false breakouts, and then a key outside day reversal, which then we've had we had a key outside day reversal last week. Then we've had two inside days, and which have just broken lower and are continuing lower today. Like that, I would only want to be short gold.
And so now if
Now,
you guys
is
are
it doing that because the pound is reversing and everybody thinks it won't happen? And if there is actually a leave vote, will everybody pile back in? I think so, but I think this is another squeeze. And remember, markets, the positioning of other people is more important than price. Doesn't matter how cheap it is. If everybody's already long, there's nobody else to buy. So
That's a great point. And how, so I'm going to ask you, how important is, because I know the answer, but how important is positioning to you in the
everything,
markets? It's everything, right?
everything, yeah, it's
It's everything.
everything, yeah. Because you could take away the price and just mark levels with lines, and all you want to know is what's everybody else doing. The
Uh-huh.
price really doesn't matter as much unless they're big round numbers, which you will see. Like you could take away those axes because you could see that by people's behavior at those levels. So yeah, it is everything. Everybody got too short the pound. Everybody's got too long gold. You know,
Yeah,
that's
right,
the issue.
right. And if
So
looking at that, it might even be an expanding wedge or
yeah,
a
yeah, it might
megaphone
be.
pattern, megaphone type of
Right.
pattern, which is a very rare type of pattern
Very rare, but
that you
very
don't see that
common in
often.
big volatility, when you see big swings, especially if
Ah,
everybody's got long. So, yeah,
yeah.
and I'm not uh, that's what I see there.
All right. Now now I know there's been a lot of comments coming in, and I'm going to stay away from
Oh, we're
political
going to do
comments.
questions. Okay.
No, but I want to no, I want to open up any questions. We're going to continue to talk, but any questions you want to direct at Nick, um, for, please feel free to non-political. I'm going to ask
No, I
kindly.
don't. I don't
No,
mind
because
political as long as no
I
one's
know
calling
no
me names.
no, I don't want to get into that. I don't want to get into that either because it really, again, it doesn't matter.
Okay.
You can say what you want about your stance, but really it's the vote's going to be the vote, and the outcome is going to be the outcome, and I'd rather focus more on what we're seeing in the markets and how to navigate through that, because I still think that as we get towards Thursday, Nick, as we get towards Thursday, you're going to get. I'm always in the belief before
Gonna get
big event.
crazy. People, I honestly, it's gonna get crazy. It is.
It's yeah.
And people are gonna be hanging on the polls. You need to find a copy of the schedule, like on Thursday itself, there won't be any polls, but I think that there will be big money betting, and you should keep an eye on it. Yeah.
So
So
the Lucas says, does Nick have a dollar yen target near term? So, you're bearish the dollar yen, which I am too, by the way, and I'm thinking that that break below
I really
105.50 was
do.
big.
Okay, so here's my monthly chart. I'm going to take this fib off.
Okay.
Okay, so here's a monthly chart of the dollar yen. So from the 1998 high to the 2012 low, we rallied into the 618. Like, it was a bit messy. It was a head and shoulders top. When you rally into the 618, then you normally say that you're going to the 38.2 next, which we didn't quite tag, and that's down at I think it's 103. So that's at 103.10. And quite often, if we don't hold there, which I think we will, they're very, very sloppy tests. Just below that are these previous lows. So from 99 to 2000 and 2004, that pivot level is 101.50, like a huge pivot level in the dollar yen. And then the 2009 high is also 101.50. And then you can see these monthly highs, 2013, and then we sat on it in 2014. So 61.8 and 38.2 Fibonacci's are very sloppy tests. So you'll go through them and come back. And so I think that while the hard line target is 103.10, I think that we could drop down to 101.50.
And
So
and
that's
in
my target.
Okay, and even if we, and especially if we overshoot, which, as it becomes so volatile, and like, let's say let's just say, for argument's sake, the UK votes to leave, the dollar yen could very easily be below 100, just on a spike low below 100, which may pose an opportunity to be on the long side, because I would think that the BOJ might look to be active, because every central bank is
Yeah.
looking to be active at this point, right?
And when you look back in history, you can see how active they get at that level. So I'm going to go back to the weekly chart, and you can see here's 101.50 in 2014. See how, remember that endless range that we just sat and bounced about. So yeah, I don't think that we're going to go through 101.50 without intervention. But I think it's a really good target.
Okay, very
So
good.
that's my
Now,
level.
couple other questions. Radhika asks, Nick, are you following some of the commodities like wheat, cotton, etc.? Because I just say
Yeah,
that.
no, I'm a big fan of the grains.
Okay, is there anything in particular that's jumping out at you right now?
The grains are all trading with the weather. I'm still really bullish soybeans. I don't. If I was going to say anything that would be least, I would say the markets that are least likely to be affected by moves in the dollar on Brexit, it's the grains. They will be the best behaved. You could probably trade them Friday without worrying. So
That's some relief for those of us that will be trading, which I won't be. But for the people that are trading, that'll be that would be welcome news. Would be some of the commodity markets.
yeah.
Witt says, why are the bookies regarded as so highly as a predictor? Now, you brushed on this a little bit, but
Yeah, because in the referendum, because in the last election and the referendum, the pollsters got it completely wrong and the bookies got it completely right. And so people think that this time that must be how it's going to be. And I'm not actually a big fan of that view. I don't necessarily think that that's the case.
and as you pointed out a little bit earlier, it just takes a very little amount of money to sway the bookies.
Yeah,
And so if there's obviously the big money is in the markets where we currently trade right now. But
right.
if you really want to sway the market sentiment, you can sway it through the bookies, which then makes it a very inaccurate predictor of future price movements, right? And especially that
Exactly.
everybody's on it and everybody's looking at them too. Now everybody's focused on the
Oh,
book.
big money is trading this referendum. Big, like everybody. Yeah, big money is trading this referendum.
Okay. Now,
So
yeah. So
it will.
that's Go ahead.
So it will make swings.
Got it. Okay. Now, I see you drawing an A, B, C, D right
So
there.
yeah, I just want to point this out that we're nearly there. Like everybody I know looked at this Aussie Kiwi chart. Everybody thought, oh, 50% back. I think that there was too much interest in this chart, but it
Yeah.
has nearly made an ABC. So it squeezed out everybody who's got long and everybody who thought it was a head and shoulders and tried to get in early. And I think that if we can hold this level, if we can hold 104 on a weekly close, we might be setting up an interesting buy around here. I meant to
You
say that.
know, I'm glad you did. I tweeted that chart
Did you?
on Friday, actually, on Friday, and I basically said, hey, I haven't given up on it, and I have a small position which I'm looking to actually add. If it can turn around, I think we have to get above 105.50 to really, put the bulls in charge. But these are the kind of pairs that I'm actually focused more on right now that will be less affected
Yeah.
by what's happening this week.
Although once we've got it out of the way, I think we're all going to go back to talking about what the Fed are going to do. So
Yeah,
thank
right.
God.
Because thank God, thank God. Who would have thought we would
Now,
have said that?
I just want to say about this ABC, if we draw it this way, if I just put the fibs on from this big rally, so this first swing lower was into the 61.8. That means that the first pattern that we should look for really is a Gartley. So I'm just going to draw on. So the 786 and the, I'm just going to put a rectangle so you can see it. So it's a bit than ABC. So I'm just going to say don't preempt this because, oops, making a proper mess of this chart, because it could come a bit lower and make a golly. So down
Got
to
it.
103.15 potentially, and still be an ABC and still be a bullish pattern.
That makes
So
sense. Okay. All
yeah,
right.
and right down there is about where everybody who bought the ABC would get squeezed out. So it's a good setup.
Sweet. Um, uh, Patrick G. He asked, "Hey
Hi,
Nick, can you give it?"
Patrick.
Patrick's great, by the way. I met him in person. He came to
Oh
Dallas
wow.
a year and a half ago. Yeah, it was great. And he's Kevin Ferry was in town, and so he came in for a training, which was great to meet him in person. I actually got a picture with Patrick. He said, "Hey Nick, can you give another example of seeing positioning versus in price versus via the charts? Via the charts. I'm sorry, seeing positioning in price via the charts." So if you're looking at a chart,
Yeah.
how do you recognize positioning?
You know, I, to be honest, your first clue about positioning is if everybody's talking about a market. So, and a good example is crude oil, which I'm going to put on a daily. Okay, so in this rally, in crude oil, which one have I got? Okay, so this is the front continuous chart.
Yeah,
Okay, so in this rally in crude, the first time that everybody got short was when it rallied 50% of this decline, and then it rolled over. And then if you see everybody talking about crude oil being short, and you look at the COP position, both times in crude oil, both in March and then again in May, there was a huge build-up. You could see people building up shorts, and everybody was talking about selling oil. And so you see that, and then when you see that, and then all of a sudden it goes really fast the other way, all I do is just look for the next fib level up or a fib projection, because that's where it's going to go, and that's where it's all going to be exhausted, and that's where suddenly everybody will throw in the towel, and then Dennis Gartman will say he's buying it again, and that's when you know like it's over. So that for me is, it's really, when you see a level and the price breaks above it and comes all the way back, so it's like a false breakout like we just looked at, I don't know, in the bonds.
Yeah.
It's the same thing in positioning. It's not one candle that goes above a level and comes back. It's just you see it rolling over and then all of a sudden it goes really, you know, hard the other way. That just means too many people piled in. And you just got to wait for the squeeze to be over, mark your next level, get out and wait. You know, if you haven't got the margin or the stomach for it, and very often I haven't, then get out and wait for your next sell setup, that's all, or buy setup, or whatever you're trying to do.
Interesting.
But for me, I look at what everybody's talking about. I look at the cop positioning, yeah, you don't really see it. You can't really see. Well, you can in volume profile or market profile. You can see at levels where everybody bought. You can look at volume, but it doesn't always tell you. The COT reports, I think, are really good. And
Yeah,
I
definitely.
get sentiment reports, and that's very helpful.
On your
So,
sentiment reports.
yeah, sentiment trader and the DSI numbers are very helpful too.
Awesome. Now, Guy had asked, and he asked about the pound Swiss, and Guy asked, he said, could you take a look at the pound Swiss? I'm long from 136.36, and I haven't sold any yet. And, you know, the pound Swiss, just I need to add here, has been, the last couple weeks has been the, like, that was my trade should the UK stay. You know, I just wanted to be long the pound Swiss, and unfortunately, it took off, you know, like a bat out of hell because of, you know, once your member of parliament, Joe Cox, when she was shot, that it, you know, all the cable pairs took off at that point, and it's like it's kind of left the station already, but it still, you know, has made a really big move, and I still think that, you know, should there be the UK stay, I mean, the pound Swiss could still be one of those currencies that really takes off.
Do you like I have to say that I hate the Swiss National Bank so much, and the idea of like trading against them, and you know, doesn't fire my rockets very much. I have to say,
That's why
that's
I don't
my
trade the
personal
pairs.
yeah, that's my personal view. So I don't actually I'm just pulling it up now. I don't see any edge in this chart.
You don't, okay. And so
So
I would have if it would have.
I
Yep.
think that you see, this is another chart that says the pound's going to rally hard into the result, and then that'll be all over, and there'll be no trade. Um,
And I think that's a very likely, you know, scenario too,
yeah,
what you're saying. You know, and
just let me get rid of this. Um, this looks like an ABC, so I'm sorry I didn't prepare pound Swiss, so and I don't
oh
have.
no, no problem. That was just kind of throwing it out at you.
No, this is quite bearish. Look, that's a perfect ABC, isn't it?
It
Into the
is.
50% back. So yeah, that is bearish. I think that this rally then of the last 4 or 5 days is just a squeeze, and that you should be looking to sell rallies. So I would be
Got it.
definitely having seen that. Perfect. So now on this pound Swiss, oh, how much are we returned? 618. So yeah, I'd like to see it roll over at like 142. I'd like to see it not above 142, which is a bit of a good pivot level here, these previous highs and that
That's
low. So yeah, I'd
yeah,
like to see it hold 142 and then get back below 139. You're on your way lower.
got it. Now this last question I wanted to bring to you from Alex. He says, Nick, this may be a bit political, but what football
Okay.
club do you support?
What a football club. Oh my
Yeah,
God.
come on, let's hear it.
Well, I share a house with somebody who's a mad Liverpool fan, but let me tell you, I cheered for. I'm not really a die-hard Liverpool football fan, but I did cheer for Leicester big time this season. And the only team I ever went to see regularly was Brighton, so they're not
Well,
going
and
anywhere.
there we go. And I'm gonna leave it with that. And Nick, I'm gonna take back over from here because we're
Yeah,
approaching
out of time.
the end of our webinar. But hey, you know, I wanna tell you what a pleasure it's been. For those of you that don't know, Nick
So
trades.
I'm just this last chart that's on my screen is like
Oh shoot!
S&P.
Oh
I think
wait,
we
wait,
can. I
hold on.
think.
let me go back to you. Hold on. I need to. I'm going to make it go back to you. Okay, it's coming back to you.
Okay,
So
so I'm just going to say there's my S&P short term. I think we're setting up a Gartley. I think we're on a leg lower to 2045 from here, which is 40 points lower.
wow, wow. So that,
Okay,
but that
and
doesn't.
then and then it's a bullish pattern.
Okay, then it's a bullish pattern once you get to 2040. But that doesn't
Or it could
jive
be,
with the
yeah.
that doesn't jive with a stay vote though, does it? Like if we stay, if the UK stays?
No, I know. I have to say what I see. Sorry.
No, 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 that's great, but could we, and then I'm going to
I
ask you
think
this
that
with could it be a buy the rumor, sell the news? I mean, everybody
definitely,
expects
and it could
uh
be, if could be if people think that, yeah, no, I'm just saying it looks like we've got another leg lower before we go higher. So
that's an
sorry.
important that's no, I'm glad you brought that up. Okay, I'm going to take back the charts and I want to I just want to say that thank you so much. I know Kip is coming on right now and I'm sure he'd like to say hello too.
Hi,
Yeah, good
Kip.
morning, Nicola. Yeah,
Hi.
how are you?
Good, thanks. Yeah, I'll be glad when this week's.
Listening.
Thank you.
Well, Nick, thank you so much for taking the time today to spend with us ahead of the Brexit vote. I know it's going to be a big week. It's going to be a big week for all of us. The cable's all over the map. It's just rallied at 50 pips just a few minutes ago. I'll be excited when this is all over too. So thank you so much for being here with us today. And we're going to be, everybody's looking forward to seeing your work with Forex Analytics at the beginning of the month.
Yeah, I'm so proud of this. I hope everybody comes and has a look.
I think
Great.
everybody will. So thank you so much, Nick, and have a great day, and thanks for being with us today.
Okay, bye.
Bye-bye. And everybody, that was Nick Trades, and I don't want to step on Kip's toes here because I know it's time for Kip and the opening bell. So Kip, how are you doing? How was your vacation?
It's great. I'm exhausted.